Hot take, golf is not as big as you think it is. Over the last year, I've been in the trenches with dozens of golf tech founders, smart people building real products, solving real problems, and putting in some major effort. But I'm seeing a problematic recurring theme within this cohort. And that is that many of these founders want to build the next big thing in golf, but they're waiting on their next big venture round in order to do that. But here's the reality check. They are dramatically overshooting the upside in the golf market alone. Golf is a strong market, but it's a finite one. There's only so many customers. So if you're out there raising capital for a SaaS product, as example, that only works in the world of golf, that is a quick way to kill your cap table and your company. You see, when you take outside money, you're also signing up for a growth rate. And if you're only staying in the world of golf, it's unlikely that that growth rate expectation is something that you can meet within this smaller market. That pressure will force you into bad decision territory. I've lived this, I've seen it over and over. If your market has a cap and your investors expect you to hit the moon, something is going to break. If you want a shot at a life-changing outcome, the framing has to be different. Golf's an incredible place to start, but it's rarely a big enough place to finish. So simply put, golf should be your proof, not your ceiling. With that said, let's look at some companies that can help paint the picture a little clearer for you. So the first one is CoachNow. That is the platform that I founded, built up over a 13-year period, and actually had acquired 2 different times. Now, the reason we had that level of success is because we knew from the very beginning this wasn't just a golf product. We did launch in golf because that was my background, but because it was a collaborative tool, we knew it would go into many other sports very, very quickly. In fact, it went into over 80 different sports and 140 countries over this 13 to 14-year period. Now, when we were raising venture capital back in the day, that was the main reason we were able to close those deals and eventually get acquired, because it was not just a golf company. Next, let's talk about Swing Catalyst, also known as Initial Force. To me, they're the primo brand when it comes to the world of high performance feedback. Whether it be with their hardware, with pressure and force plates, their cameras, their integrations with different launch monitors, all the different ways to collect this feedback and tell the story to the best athletes and coaches in the world. They've got massive traction in the world of golf with names like Bryson and Tiger using their tools, but you also have the Dodgers and others that are buying systems left and right so they can get that distinct advantage against their competition to find those little pieces. Now, again, Swing Catalyst started in golf, but quickly has gone into these other sports with great success, and they're moving into fitness for functional movement and things like that. So the sky is really the limit. The last one here is Chipped Sports. They have figured out how to put a launch monitor inside of a golf ball. So their first product is in the world of golf as a proof of concept and to build out all their algorithms, but that same technology can easily fit in just about any ball or even a hockey puck. When that team is out telling the story of their business, it's Chipped Sports, not just Chipped Golf. So anybody that's about to write them a check and join them as an investor clearly understands that the total addressable market for their particular business is absolutely massive. Now, just because I highlighted these 3 companies, and I could have talked about a bunch more, it doesn't mean that I want to shit all over your dreams if you're trying to build in the world of golf exclusively. There's no problem with that. But what I want to help you understand is that the capital requirements or your vision for raising capital are going to be very different, because there is a ceiling on how much you can grow. No matter how many different levers you pull for monetization to monetize a golfer or a coach, you can only get so big, and that's totally fine. You can build a killer business in the world of golf. It's just not going to hit that big unicorn status unless you're out there acquiring dozens of golf companies, which that could be you. If you're watching this, I would definitely like to talk to you if that is you. But again, what I want to help you understand is that if you are chasing that venture scale outcome, you've got to break through this ceiling. Golf is the proof, not the limit. So as we wrap up here, if you're building in this space and want to talk strategy, feel free to drop a comment below or shoot me a DM. I want to do everything I can to help you build that company of your dreams and to make sure that you can go the distance. See you next time.